Hello there. In this video, I want to talk a little bit about divorce and bad credit. I get a lot of calls about people getting divorced, that maybe something happened to their credit because of the divorce. And in order to get a VA home loan, there are a lot of rules regarding divorce. And so I want to go over some different scenarios and where the divorce might not matter, and other scenarios where the divorce might matter. And so, before I get started with this, I want to let you know there are a lot of lender overlays on this. A lender overlay is a rule over and above what the VA requires. Because I'm a broker and I have a lot of companies I work with, we are able to work with low and no lender overlay lenders that are really good at working with that credit. So whether you work with me or work with someone else, make sure to work with a mortgage broker who can show you all your different options out there for getting a home loan. So the first scenario is if the bad credit occurrence from the divorce is over a year old. That's an easy one because basic VA guidelines really say there's only a 1 year look back. Like I said, there are some lenders that will look over a year, but if the occurrence is over a year old, it's all fixed. You're good to go. We don't really need a lot of other explaining if you work with a minimal or no overlay lender. So if the occurrence is less than a year old, we have something called an extenuating circumstance. And so the VA does have guidelines for extenuating circumstances in certain situations. So I will show you with regard to divorce where you can or cannot use the extenuating circumstance rule from just different things I've seen. So the VA does say specifically that divorce itself is not an extenuating circumstance, but there are lots of exceptions due to things that happen in divorce situations. So I'm going to go through different scenarios and tell you whether or not that would count. So the first scenario would be maybe you are paying too much child support and alimony and you can't pay your bills. It happens. Unfortunately, sometimes these judges are unfair and charge too much or more than what you think is fair. And sometimes the credit goes bad because you can't pay your bills. Well, in that scenario, unfortunately, that is not considered extenuating circumstance, and you'd have to wait that year. So sorry on that one. The next one, situation, went into debt to pay the lawyer. These lawyers are expensive, sometimes $10,000, $20,000, $30,000 or more, depending on what your situation is. Unfortunately, that would also not be considered extenuating circumstance, and again, you have to wait. Scenario 3 is more interesting. So we've got child custody cases. Child custody where it's not safety related, where maybe you just feel you don't have enough visitation, you think you should have joint custody, whatever it is. In those situations, again, not an extenuating circumstance, so you would have to wait. Scenario 4, this is where it gets really interesting. And I actually just did a couple of these. Child custody case where it's safety related, so maybe I have a couple different ones where, like, for example, they had a disease and the spouse wasn't helping them, wasn't taking the doctor properly, and they went and got custody and they fought him in court, and the parents had to miss a lot of work for court battles, like that type of thing. That could be considered extenuating circumstance, depending on how the lender looks at it, and you could have that 1 year exclusion. The other one that's very similar is abuse situation. So maybe the ex is abusing the child and you're going to court to get that fixed. That can also be considered an extenuating circumstance. I just had one of those. Now let's talk about when the ex messed up your credit. So there's actually two different scenarios here. The first is if the ex messed it up prior to the divorce. So maybe there's a car note, maybe before the divorce, you said, okay, you need to pay these bills and I pay these other bills. So a lot of times people don't always pay their bills together. Now, if the ex messed it up prior to the divorce and it's still not fixed, unfortunately, that would not be considered an extenuating circumstance. You'd have to wait. The other one is after the divorce, especially, and typically it would need to be in writing. I'm trying to see if we can figure out how to do verbal agreements. If anybody knows, let me know. But if it's in writing, you can definitely do this because I've actually just talked to somebody about this. So, for example, I had one that the ex was supposed to take their car. They said, okay, you're going to get my Honda Civic and you make those payments. And it's in the divorce decree. It's all written out. Sure enough, after divorce, the ex didn't pay it, and but it was still on credit because my veteran borrower never took their name off the note. So it's a joint loan, but the ex is supposed to pay it. Well, we figured out that they actually did not pay it, even though they were supposed to. We were actually able to exclude that and consider that extenuating circumstance. And in that particular case, the 1 year rule did not apply. And even though it was all messed up, we could still do the loan. So that is a few rules about divorce and extenuating circumstance and bad credit. I know it's pretty complex. Whoever you work with, whether you work with me or someone else, make sure you work with a loan officer in a company that knows what the heck they're doing, because a lot of times these online lenders don't know what they're doing, honestly, and they're not very experienced. This is a very, very complex and specialized part of VA lending. But if you are interested in working with me, I am licensed pretty much everywhere right now. So I would love to work with you. I can be reached at 937-572-3713 or scupper.com. Look forward to talking to you. Thanks. Bye.